television, read things in books. They physically saw people doing things. They was like, yo, I want to do that. So what I want you to do for me is I want you to, and I know a lot of you are adults and you're adulting, and sometimes you don't have time for dreams and goals and stuff, right? But I want you to do me a favor, like don't let life do you like that. Like don't let life put you in a circumstance or a situation where you stop dreaming. Like don't let life put you in a situation where you are helping somebody else make their dreams become a reality that you forgot you have your own. Like don't do that. Don't get so caught up giving some job 30, 40, 50, 60 hours of your day that you don't have any time left for yourself. And so do me a favor, I don't want reality right now. I'm not interested in how much your student loans are. I'm not interested. Because your student loans are sucking your dream. I'm not interested right now. And I got a divorce and right now I just can't, I'm not interested. Not interested. Eric, I lost a child and you don't know what it's like to. I'm not interested in your reality right now. I want you to get back to your dreams. I want you to get back to your goals, because no matter what has happened in life, you've got another 30 years, another 40 years, another 50 years. Like you can't get stuck on, like you can't let that thing that devastated you in 1989, the thing that devastated you in 1996, 2001, like you can't wake up every day to 2001. 2001 was a tragedy, yes it was, but you can't stay there. Look, I want you to look at your goals and I want you to ask yourself this question. Do you know what it takes to make that happen? Like, do you, like literally, like, cause this is what all it's gonna take. 3 things, it's all it's gonna take. Do you know what it takes? And you guys have an advantage because you've been at this conference, I think 3 days, you got a whole bunch of information. Look, the only thing it takes to go from where I went to, a homeless, high school dropout, sleeping in abandoned buildings, eating out of trash cans, I went from being a high school dropout, getting a GED to having a PhD. Listen to me, the only thing it takes is knowing what it takes. So one day I woke up and was like, okay, E, stop talking about what you don't have. You need to know what you don't know so you can get to where you're trying to get to. So being successful is not who you are, it's what you know. So I need to get a different relationship to knowledge. So I'm hyped, but I did not come here just so you can get pumped up or get hyped. You have been given information. You are this close to making every dream you wrote down happen. Why? Because you have been taught by the best of the best. You have been taught by the best of the best. You've been taught by people who've been doing this for years. You've been taught by people who love you and care for you. People who are giving you information that you're not going to get randomly on your own. And so you are this close to your dreams and goals. So I have to ask you the question. You have the information. Now what are you going to do with it? You were born with greatness in you. How long you gonna give me excuses and this person didn't do that and this person? I'm a high school dropout, slept in the abandoned buildings, ate out of trash can. We go tit for tat. How long you wanna talk about that? When we gonna start talking about traveling the world? When we gonna talk about realizing your potential and waking up every day and giving me 120%? So I need you to do me a favor. I need your whys. This is what I want you to do for me. I want you to wake up. I want your whys. If you can put them on your phone, you can get the face printed out, put them in the car.
All right, guys, let's get rolling. Eric Thomas, the preacher. He's the man. I like to start it off with some motivation. because trading is very mental, guys. So you really want to have a good mindset. You want to be ready for these charts. First thing we're going to look at is the news for the whole month. I want to see what they got cooking up this month, right? We already had NFP last week, was all right. Looks like the market kind of reacted very volatile to it. We'll look at that on the charts. We'll see if we think the dollar is going to continue to go bullish or not. Okay, but it looks like we got the AUD raising rates tomorrow. And let's see, for the rest of the week, we have, this is going to be important, Thursday when the Fed speaks, because this is the month that they are raising rates. So let's go find the day that they are planning to raise, or planning, here we go, the 21st. And they're not going to have anything about it yet. There's no expectance, anything yet. But the 21st of September, guys, is going to be a humongous day. And what we can almost anticipate is it's not like we can anticipate it, but what you want to try to anticipate is if the market is going to price this in. So whenever there are rate hikes, that is usually bad for the stock market. All right. And the reason being is because when you raise a country's interest rate, that allows big money to come in and invest into bonds. So what's going on here in the real terms of the charts is the bond market is going up and the stock market is going down. So when the bond market goes up, they have to tighten their policies. Because think about it, if a bond is basically a guarantee on your money. So if a bond is at $3, you're guaranteed, or a bond is at 3%, you're guaranteed that 3%. You are not guaranteed nothing else in the market besides a bond. Okay. A bond is like the most secure, solid asset you can get. Everything else, like like gold, when you buy gold, you're not, you aren't promised anything on that return. When you buy stock, when you buy crypto, all those are considered risky assets. Bonds is the opposite. So when bonds, non-risk assets, are going out the roof, that's big money. You're saying, well, fuck these stocks. I'm just going to go into this easy, secure, and bonds now are almost at 4%. So think if you have $4 billion, $5 billion, and you can get 4% on that, 3.5%. Without a risk. There's no risk to that. That's 100% you're getting that back. So that's why this market's moving like that. And it's only going to get worse as long as the bond market continues to go up and as long as they tighten the Fed tightens the policies. It's all about the Fed, guys. It has nothing to do with the dollar's in a supply zone and the crypto market there's going to be a halving. All that it's nothing if the Fed doesn't bring liquidity into the market. So the 21st is going to be a big day, but I think we're going to get it priced in way before that. And this is going to be a big, big monumental month, I think. So what I'm going to predict, okay, I'm going to predict that we are going to see a massive leg down before we even get to this date. Okay, before the 21st, we're going to see probably a massive leg to the downside on the indices because the market is going to price in a rate hike. They're going to price in higher than expected probably because now we're getting unemployment pickup. And so not only is because the Fed has two jobs: to keep unemployment rate down and to make sure that interest rates are good. That's all they got. Or inflation. Sorry, I said interest rates. I meant inflation. Well, we know inflation is out of control. They fucked up on that. Well, last week we had an uptick in unemployment, which is bad. So are they really about to screw up both interest rates and unemployment? Boy, if they do, guys, the markets are going to tank. But we'll go into the technicals on when it makes a new low. I might be looking for divergence, and this might be the low of the century. I don't know. I'm not trying to time it like that, but Eventually, what's going to happen is the Fed is they're going right now, they're hawkish, and hawkish means they're tightening. They're hawks. They're fucking coming down in here and they're tightening everything up, and they don't want nothing good really to happen for fucking investors unless you're investing into bonds. So everything is tight, tight, tight. Eventually, it's going to change. Nothing good lasts forever and nothing bad lasts forever. That is a very, very, very big quote you need to understand, okay? So eventually they're going to go dovish, which is they lighten things up. Doves are nice, hawks are mean. And, you know, they're going to lighten things up and liquidity is going to come back into the space, okay? When that happens, when they stop raising rates, when they start lowering the interest rate again, that is our macro bottom, or that is our real opportunity to find a macro bottom. And this is once a month, we do these macro analysis, guys. And it's only once a month where you go and look on these monthly charts and you can kind of see what's going on. And so these analyses are a little more in depth. They're a little longer, but this is kind of what I put my back on these analysis. I put my backpack on and then I go travel through every week with this backpack on, right? Knowing what should really be going on, right? So we have the 21st is the biggest date, but we're probably thinking it's going to get priced in before that, okay? And everyone else is going to be raising their rates as well. So we're just going to see, we're just going to have to see. Really this week, there's nothing to worry about except this. This is going to give us a whole lot of insight on what's going to happen, because I don't think we hear from the Fed anymore. Yeah, that's the only time we hear from the Fed until the rate hike. So that's going to give us a real big sentiment, because this is just my prediction. It's going down. But if they start to tighten right now, if they think that little uptick in or downtick in inflation, barely downtick, if they think that's good enough, maybe they will start to reverse this thing right here, right now. And that will bring an interesting fundamental technical divergence that I genuinely have never seen before. So it'll be interesting to see what happens with the fundamental on the 21st. Like I said, we're predicting it to be priced in before that. All right. So let's go ahead and look at the charts now and see what we got going. So we're going to go over into the layouts and we're going to load the macro. Okay. We only look at this once a month. So the levels and everything, they might be a little off, if that's the word I'm looking for, but we'll go into the weekly outlook and we'll see how everything played out. And hopefully there's some levels still drawn on here somewhere. Okay, cool. There we go. All right. So the dollar, let's go into the monthly and let's hide everything real quick and look at the monthly candle that we got. Last month closed bullish candle with more volume. It's textbook that this is going to continue to go higher. There is almost there's no 100% chances in anything with the market, but whenever you see this type of textbook signature of volume just increasing and prices increasing with it, that's usually a signal that price is going to continue at least a little bit more. It has not really put in that super bearish volume signature that it needs to put in for a monthly candle. Now, last month, the month before, it did have this big wick with a little bit more volume. So it did have a chance, but when you just erase a full month like this, there's no point to look for sells yet. They're just, on a macro perspective, it just hasn't truly set in yet. And now that we're starting to break these highs, we have to come over here to the left and see what we're looking at and if there is any other opportunities over here. So this big fib, let's bring this and let's bring this up here. Oh, that's not right. What happened right there? But we are above fib levels. So this isn't really, or almost at the fib level. Very interesting. I thought we were at these fib levels. We're not yet. So this is good. We're right here at the 78.6. So 110.54. I'm going to go mark this one off at that direct price, 110.54. And let's lock this in. This is going to be a price. Did I press lock or alert? Oh, well, this is going to be a price that we're going to really look at to hold. Honestly, I want it to hold more than I want this to continue. But the volume is telling me it's going to continue, which is annoying. So here's how it has to be played. Will it hit 140? That is something I have no idea if it's going to go to 140. It has to really break 120 first, obviously. Like 120 needs to break if things are going to go crazy. Because if you really look at this, this is just a correction. Okay, this is still just a very big correction. And if you wanted to get real down and dirty with it, right, we're coming up into the 78.6. This could impulse to the downside. I would love to see another chart. That's great. I love it. I love it. Let's throw this up here. Okay. Yes. All right. So that will take, and I totally see what you're seeing right here, like 1,050%. The only thing is, look how long, like you're predicting all the way into 2000 and like whatever, right? 2027. So yes, that is like probably what we're going to see happen. But I'm not trying to get that too deep, that deep into it. I'm trying to stay more of what's going to happen this month, maybe next month, maybe the month after that. Yearly stuff, that's more like, let's look at a 12-month candle. All right. Obviously, look at this 12-month candle. Bullish as hell. There is no even reason until the end of this year, really. If this doesn't have a wick, this is gone. So, but I like that chart and I like that perspective a whole lot. And ultimately, yes, really would like to see a reaction right here. And then probably another move up, to be honest. Like, that's probably what's going to, and it might even just hold here and go up. Okay, so monthly candle perspective, it just looks bullish, guys. It's hard to find the reversal yet, but look on the weekly. We're starting to get signatures of the momentum slowing down at the bare minimum. Okay, so this doesn't necessarily mean it has to reverse, but it does mean it's getting tired. It's getting tired of just going up forever, and that makes sense, right? What goes up must come down. We have what I like to call three-wave divergence. And when the market creates this type of divergence, there is a high probability of a correction. Reversal, no. We're not thinking reversal. We're thinking correction, maybe. This was the last scene we were looking at. It didn't quite get into our full macro area. We barely missed that opportunity. But it's starting to extend into these areas. So let's go ahead and draw this kind of out like this, held right here, kind of faked out, and then we just copy and paste and move it up. So we're not really getting too objective with it. We're just, point, looks good. Now, here's this 78.6, and we'll mark this off right here so we all know. This is a 78.6 monthly. Crazy, crazy level. We should see a reaction there regardless of how long it lasts. But what I'm seeing on the MACD is we're kind of flat on the daily. So if we're divergent on the weekly, flat on the daily, that is a sign of divergence. It's really showing that like we should slow down soon. But the monthly candle is just so bullish that any of that is just a low probability, if that makes sense. So it's still a play. I still see it slowing down, but I also just cannot get over the fact of how bullish it is. Okay. So how we're going to really look at the dollar is we are going to be on the lower time frames, and we're going to try to anticipate. We're going to try to anticipate this to snap soon, because it is in this more of a correctional phase. Who knows how much higher it's going to go? If it does get up here without getting down here first, I'm going to expect a correction. If it gets down here before it gets up there and it just starts to snap right here, well, I'm going to expect something like this, most likely. Now we could see a deeper correction already occur now without the 78.6 getting hit, but with how that monthly candle looks, I think, here's what I think. I think a lot of people are looking to sell the dollar because it's just kind of in this interesting supply area. And I think the monthly candle is pretty much telling you, don't sell it yet, sucker, because I'm about to go a little bit higher at the bare minimum. And then I'm probably going to drop. I need some liquidity first. Okay. That's highly what's likely going to happen. So we're going to wait for that. We're not going to go down to the 1 hour at all today. But we understand that the dollar is super bullish, but we also understand that it needs to correct. And the correctional area might even scare some people because it'll most likely dip past this trend line, just like it did over here, and come into this nice area right there. So let's just confirm that. Where's my, let's bring in the juice. Yeah, and you can see some volume just right down in here. Perfect, untested. This is the perfect area right here, is where I'm expecting price to get into. So this is some this is a weekly POC. So the week, basically the week that the market took off right here is where a whole lot of the volume was. Also right here, and that's a little interesting spot. I do want to see where this, very interesting, guys. So you see that weekly I marked off? It's this almost the exact same as the yearly, the whole year's price. This is the most traded price right here, pretty much. So we're expecting bullish moves right here until the market makes a bigger shift in structure. Ain't no way I'm bearish. Yeah, really, honestly, this has to break now. So we're putting our chips all in on the dollar if it comes right here, all in, and expecting it to continue to make higher highs. If it does not do that, we will know the direction of the market. We will know the direction of the market. Okay. So that's all you need to know. You don't even need to look at any of the other currencies. The other currencies are probably going to go down a little bit more before finding a possible bottom and then turning around, because the dollar is going to control this. Okay. The dollar is going to control all of this unless one of these other countries does some crazy with their interest rates, like some crazy shit, like the Japanese yen could, or the Swiss franc could. They're the two that haven't really got on the board with the big O, let's raise our interest rates because we're fucked yet. They're gonna soon, and you never know when it could be. So this is just this freaking beautiful range right here, and I'm gonna just keep it like that. All right. Like I said, guys, these are really all going to look so similar. We'll just keep what we got, I guess. But these are all going to look very similar. We'll look at them real quick. Okay, the monthly candle closed a little bit more bearish, still below these lows. It still does look like it could possibly spring up at any time, but the possibility of trying to just catch the bottom, if you're not that guy, don't be that guy. And we're not that guy. So you can just see this has potential to go lower. Nothing every month, people are trying to call the bottom on the euro since freaking honestly, since way back here on this month. When we had this little move right here, people have been trying to call the bottom on the euro for so long, since March of 2022. So 1, 2, 3, 4, 5, 6. This is the 7th month that people are going to try to call the bottom on the euro, and they're going to be wrong again. So just let it. When I say all in, I mean like I'm all in on my prediction. I'm not all in on my money ever. I'm always 1 or 2% max. 2% it for me is fucking crazy. So I'm the least risky person you'll ever meet. Straight up. When I mean all in my prediction. I don't care if I'm wrong or right. If it does what I think it is, it's going to be that. But yeah, don't try to buy the euro yet until it's shift structured. It's just pretty obvious. Last month, we were looking for it to come up a little higher and then drop. Didn't quite give us that. And on the weekly here, we're kind of flat, right? We're just the same as the dollar. It has the divergence 1, 2, 3. So, you know, I expect it to turn around soon. And if I really wanted to get surgical with it, I would expect it to turn around like right at that spot. Or right around the spot, because a monthly divergence area is interesting. It could take a couple months to play out, but it could reject here for sure off the divergence. Really though, it's nowhere close to areas of volume. Like where's this yearly volume? Weeks. Okay, let's look at it on the weekly. Yeah, so we're not even anywhere close to the yearly volume. It would need to come like way up, and then we would crash down, and that would be like a steal off on liquidity, and then a move down. So it's going to be this opposite of the dollar. If it goes down first, I'm looking for it to come up to this liquidity. If it comes up first, it's probably going to come down again, and it just is what it is. On the daily, it has the same type of look, but the divergence on the euro is definitely better than the divergence on the dollar. So what that's telling me is the euro is probably gonna pop a little bit, maybe like a little bit before the dollar ends up dropping. Okay, just a hair. I copy and paste, and I'll bring this up here, and it's inside this channel still. I could extend this channel out all the way up here, no reason. You know, like I said, comes up to the top of the channel, we're shorting. Comes to the bottom of the channel, we're buying. And really it could do some fake stuff. You gotta, whenever it's super bearish, you really got to be careful. But if it does break out, I'm probably going to take my chances on a reversal more than expecting this to crash down. I would take that L all day long. If this structure breaks and the trend breaks, I'm looking for buys, but that's going to take a minute. If it comes down here, I'm looking for buys as well. I really want to try to see if this is going to be the bottom. Let's look at the monthly and see where this is. Okay, it doesn't look like it has a ton of data, but there was definitely buyers here, or you know, volume was there at one point. Let's do this. Okay, it's not helping me. Let's do this. See if that's a 78 or anything. Oh, impulse fibs. And right below the 78, it's right at it. So it could react at any point. And honestly, I just don't think it's ready yet. Just not yet. There's even monthly divergence, which I did not see on the dollar. So even though we are getting lower lows here, barely, this momentum has nowhere close to that divergence. And it's the dollar doing that barely. The dollar is doing that, but you can see the dollar on a monthly has really broken these highs compared to the lows that the euro has broken. So it's showing more strength in the euro. This didn't play out. So look at the pound, guys. The monthly on the pound. Are we seriously even thinking about buying this? Look at this. Oh, that was a terrible circle. Look at that monthly candle. No wick at all. So yeah, I'm expecting this to get swept for sure. For sure. If that low doesn't get swept out, then everything I've learned in trading isn't real. I'm kidding. But really, that low should get swept. We're getting this volume because so many traders are taught to put your stop loss like below the low, blah, blah, blah. And in certain situations, that's how I trade too. But there is going to be so many people trying to buy with stop losses right here. And this type of signature on the weekly is literally saying, I'm going to slam through this, So be very cautious on any type of bullish scenarios on the pound. Eventually, you know, how I trade is when the market has sold off for so long. It sold off the whole month of August, the whole month, every day pretty much. So, you know, eventually there's going to be a retracement, and y'all know how I kind of trade. But yeah, like on the lower time frame, I'm looking for this to turn around. But damn, that's going to be risky. It's going to be a loss. I don't care. I know I'm going to lose trying to buy the pound right here. But I mean, I'm not going to sell it anymore. I'm not a sucker. You can't sell off forever. So eventually it's going to turn around, but not yet. It's just not ready yet. I'll need a daily candle to break, and I'll need, or like a daily bullish engulfing candle to close. And then the next day I'll look for like a retracement type opportunity. If I'm really being honest, or a divergent sniper that y'all ain't going to get, y'all ain't going to understand. So the 4 hour, really, if it can get above right here, that's major key. So really what it is a 4 hour structure needs to form to the upside. And it could really take a nice correctional move. We already have the divergence here on the 4 hour. So the market has made these lower lows, obviously, but the 4 hour is saying, hold up, buddy, we need to make a correction. It's also said, F you, I'm not correcting. So let's bring out this 50 EMA. Every now and then it's important to look at your moving averages to see how far away the market really is extended from the mean. And, you know, it's about average extension from the mean. If it does move down here before it corrects, that's a good opportunity, because you can see it'll be pretty far away from this 50 EMA in just every other situation in this existence. Every time it really slips away from it, it comes back. It'll come back. Don't worry. It'll come back. Oh no, it'll come back. And then when you pair it with divergence, it's money. So if it slips away, I'm gonna have to look for it to come back just for a little bit and then see ya. So got to be careful with these guys, because if they really start to price in, that's the thing actually. If they really start to price in these interest rate hikes like this week, forget all of this. The dollar is going to moon, and all of this is going to fucking crash. None of the divergence is going to work. The fundamentals are going to kick everyone's ass. And that's just how it happens sometimes. That's why you risk the normal like percentage on every trade, because it's not worth, it's never worth going all in. I said all in because like all in on my bias, not on my money, because I can't afford that. All right. So here's what's going on with the Australian dollar. And let's go ahead and just remove these. We don't need those. Can anyone see it right off the bat? I mean, when you're looking at the dollar, you're like, this is going up. When you're looking at the euro, you're like, this is going down. When you're looking at the pound, you're like, this is definitely going down. When you look at the Australian dollar, does anyone see it? Does anyone see it? The inverted head and shoulders. So it has an actual reversal pattern on a monthly time frame staring at you in the face. So if you're looking at any of the currencies other than the dollar to turn around anytime soon with an actual probability, it's not the euro and it's not the pound. It might be the Australian dollar. Okay. So what I'm trying to get at is, when the dollar actually flips and goes to the downside, this guy is most likely going to be the one that is just out of control because it's already holding its strength in the macro perspective, right? These dudes shit the bed. They shit the bed. And shit on themselves. This guy is holding strong. He hasn't even gotten close to these lows. And in fact, let's bring out the Fibonacci, Mr. Fibonacci, and we're not even close to these fibs. We still have, so what it's really looking like is if the dollar does just take off and fly to the upside and everything just sinks to the downside, what's going to go right into the demand area? The Aussie, right into the demand area. If the dollar goes, and that would mean the pound just sinks through this, probably goes all the way down into this thing, or the euro. It'll probably come all the way down here. The pound, who knows where that's going to go? It's already screwed, but this is going to come right into a bullish, beautiful bullish area that we've seen it react in the past. And look what happened in the past. It sunk down in there and then said, okay, never mind. So what would happen if it did this again? I would put money on it, because we will. But it's not close to this area yet. This is marked off as a macro perspective. But look at this beautiful bullish flag. It's setting up. If it gets there, if it gets all the way here, you have to look for a macro buy in this condition. You just do. But it might not get there. Okay, it might not. If the dollar turns around anytime soon, which it could, this thing is gone. And it might be a good area actually to go ahead and try for some risk, because you don't want to miss out if it flies without you. And that's kind of how I've learned to trade. Sometimes it's okay to just put half on it. Don't be, and if you're wrong, you're only wrong half. And don't get emotional because you were wrong. You were smart by only putting half. Okay, so we're really looking at this area right here, and we're getting some reaction off of it. We get some high volume coming into the downside, which is kind of saying, and we might continue down a little bit more. But the candle, let's look at this monthly candle. Last month's candle, yeah, bearish still. I mean, this is just the only one that hasn't broken that monthly low yet. So that's what I'm saying. This is the only one that hasn't broken that monthly low. So there is just maybe a possibility of it reacting here to the upside. Maybe. And then you can see this volume right here, this point of control that it reacted off of already. And this was July's point of control. So the month that it had its bullish move, this was the price, and it came in and tapped that once already. So you know what? On a lower time frame, I might be looking this week for this move up. And it might be ready after. It might happen this week. If not, it might be a situation where it's forming some type of a cumulative pattern, and it might, do some dirty style moves right here. But eventually, I think this is going to be an area longer term where we're going to have to watch the divergence in the dollar and the Aussie. And as long as the Aussie holds this type of strength against all these other currencies, then this is going to be one of the AUD versus the USD is going to be the one that you're really going to want to look to trade versus the other ones, depending on how they really roll. All right, the monthly on the Swiss. This is going to be interesting because the last 3 months we're like thinking, dang, you don't see this type of price action that much on the monthly with these type of wicks. Boom, boom, boom. Well, now we're just already reversing it. And then you'll see these fibs right here on the lower time frame. I'll take them off the monthly so we don't have to look at them. But I mean, at this point, it kind of looks like it just came into this level, rejected, and now we're coming back down. So we got to really watch to see what's going to happen, to be honest. And then here's the fib. You can see it really cleanly impulse, really clean retracement as well. And now it might be starting to impulse down. So it's not really the one I want to look to buy, even though those monthly candles have those wicks on it. Wick, 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 wick. This one just kind of takes away from all that. So the probability, yeah, maybe, Tad, maybe. The probability of this turning around right now, I wouldn't put a lot on it yet. I see on the daily we are in this demand area, and yeah, I see it. I've just, the speed in which it's moved this way versus the speed at which it moved this way is equal. So there's not really there's nothing for me. If it does this, I would probably look for it to come down, honestly, because of this monthly volume right here, or weekly volume from, monthly volume right here. And, you know, still 61.8. I'm sure if I fib this here, we're coming into those good fibs right there. So that's a level that I'm interested in. If it comes up, I'll probably look for the sell. I'm not gonna buy this yet. It's not for me yet. If it comes down with divergence, even the last wave didn't diverge, so it started to make new momentum as it went out. So it's not quite ready for me yet. If it really starts to impulse though, then I will believe this is getting ready to come up. It's just, it needs to break some levels with impulsive moves for me. Not quite ready. And like I said, guys, all of these aren't going to be ready yet, in my opinion, just based off the monthly time frame. I've been waiting on the yen to turn around for, let's talk about how many months I've been waiting for this to turn around. This is kind of embarrassing. Let's see. 1, 2, 3. This is the 4th month that I've said now the yen could possibly turn around. The yen's not turning around yet. It's just not. It's got to accumulate, and I'm realizing that on these higher levels, like macro levels, it takes way longer than you think. Maybe even a year. So let's go to, and you can see it on the weekly. The divergence is starting to set in a little bit right here, as the market's going low. So there could be, you know, a little snap, but I don't really see it just yet. We're really getting the 3 wave on the daily. So a little bit more down, and that's my signature buy. I don't care what the monthly looks like. I'm buying this thing. So if it can come down a little bit lower, and really this isn't the best, right? You'd have to expand this out to more of an expanding falling wedge type thing. So if it can come down to the bottom of this bullish trend line, really backside of this, come down one more again, I'm going to have to look for it to retrace. And really it's just a Wyckoff type of look. We've talked about it in previous videos. It's just a Wyckoff look. And this is the old all-time high. And I like to always have it marked off old all-time high, because low, because it needs to break that ultimately for a new like cycle to start. And it's really obvious at this point that it's just this zone, really, not even that line. It's this zone. This needs to break. If this can break, we're going to expect that to hold and then move up. This is plain and simple, but it's really probably going to do something like this. Play with people's minds right here and not really break too much, and then go do this all over again. Literally. Maybe it'll make a new low, maybe not. And then after it gathers enough liquidity, it'll finally do what I want it to do. And in 2013 or 2023, this time to next year. But this is interesting right here. The volume is picking up on the move down, but the volume is dropping on a little bit more of a bigger perspective. So they're starting to get this volume divergence, but the volume is still expanding. The recent volume is still continuing. So once we see this start to go like this, and this is still doing this, we're really going to know what's good. Okay, so that's a volume signature you want to look for right here. If the yen continues down and the volume continues to kind of drop, that will be the signature to tell you this is really probably the bottom. And I'm going to fib it out for a divergence fib, which, you know, lines up really well with this down here. So I'm liking this a lot. And what's going to be scary about all this is when the dollar starts to just pop out of its mind and all of these alerts start getting hit and everything gets there so fast, and it's either going to be make or break. The dollar's either going to kind of pop and then reverse real quick, or the dollar's going to pop and say, I'm going up. We'll see. All right. And I'm going to have to go back and mark all these off. So those are the currencies that I look at. What I'm really seeing is plain and simple. The dollar looks like it's going to continue to go up. This is the monthly 78.6 that it looks like it should react at. But if I'm being honest, it's probably going to continue up a lot higher than that, at least to the top of this backside of this bearish trend line that's been going on, top of the channel right here. Here's the divergence, daily divergence, that it would need to get to that for me to kind of expect an actual turnaround, unless there's some big impulse trend changes on the lower time frame. Then it is what it is. We're ready to go for the downside. Let's look at gold. What did I write here? What is this? What did I say here? It's in white. Low volume as price is rising. What? I got to get better annotating. That's not telling me much. Okay. Let's look at the monthly on Goldilocks. Ooh, not good. Not good at all. So this zone right here, I know everyone and their mom was looking at it to hold. Let's just mark it off as this zone will not hold. How about that? If you think this zone is going to hold, you're crazy. All right, this zone will not hold. And once price breaks through it, it's going to move so fast. So I don't see any reason to look for buys on gold unless you've been trading for 1 year and all you see is just this. Then that's the reason why you want to buy gold. If you've been trading for 1 year or less, then yes, you should want to buy gold. But if you understand how volume works, you shouldn't. This right here is literally saying once this zone breaks, price is going all the way down here fast. And then it's going to come all the way down here even faster probably. Let's go look at it on a lower time frame. And so many people are going to be buying gold right here. I'm not even kidding. So many people have to be buying gold, and I don't blame them. I'm not even trying to be like that. I don't blame them at all. They did make a nice move up. It did retrace, and you know, I could see it doing this. Hey, I could be wrong about the timing of when this will not hold, but it's not going to hold long term. This isn't gold's reaccumulation phase. And if it is gold's reaccumulation phase, what's going to happen is there's going to be a steal off anyway for this liquidity and then a move up. So this zone not holding doesn't mean much to me. It just means it's that, like, I understand that it's probably going to break. And then there's this big O area right here, all of 2020's POC. So a big number right there, 1570 right there. If price sleeps here, it's going straight through 15. I mean, in a big way. And people are going to be, what's going on with gold? Well, this is the opportunity that I'm seeing for possible bulls, and it's definitely there. Like, it reacted off the 78.6 swiftly right here, and some volume. I see the opportunity. I'm not even going to cap. When I go down to the lower time frames right here, there's a shot. But what I'm really feeling is that this is going to get swept. It doesn't matter if you win or lose, because that's not, I mean, it does matter at the end of the day, but you don't know what's going to happen. Is there a probability that this could go up? Yeah. I'm going to wait for there to be an actual trend shift, not just a bullish move. On this type of scenario, I want to see this thing come down here and hold, and then make a new high. I will then accept looking for buys. But if this thing comes down and breaks this low, I mean, what are you going to expect, right? It's been doing lower lows, hasn't fully shifted. Structure is way up here. If you want to go down to the 1 hour, it probably has shifted, which it always starts on the lower time frame. So if you are a bull on gold, I can understand it. I can see it this much right here. I might even play it this week on a half risk, because it's an opportunity. It's an opportunity for sure. And it's not even that bad of an opportunity, to be honest, because you could go long at the 78.6, which is, there was some volume down here at one point, and put your stop here, target these upper areas, because if you're fucking thinking this is the bottom of gold, right, based off of this fib as well, right, this held, right, didn't it? So I mean, this could ultimately be a big swing. Put half on it and it could work out. I like it, but I don't like it, obviously, because I don't think this zone is going to hold. Okay. It's still a good probability, though. Or is it? I don't know if it's a good probability. Let's look at the silver. It'll help me determine the probabilities. And silver's already broken this low. So, yeah, this is most likely going. Gold's probably going to break its low as well. I've been looking at silver, though, and wanting it to get to this area. It's reacted off of it twice. This is a yearly point of control. It needs to get above that if we're really talking serious on silver. There is a good amount of divergence here. So let me measure my divergence fib, and that'll probably line up with the area that I think gold is going to drop into longer term, because I don't think that zone's going to hold. Way down here, boy. So way down here is the way down. And that would make sense in my opinion, because the 50 EMA is probably way far away up here. Yeah. So this is getting overextended to the downside. It would give a 3-wave pattern as well. We would have 1, 2, 3. And I would genuinely expect at that point silver to freaking maybe full on reverse. You can see this epic little that's all I see. I just see that. So I could be totally wrong about that, and that's cool too, but it looks like to me kind of more of a impulse, retrace, and then impulse. This divergence fib is right in between these fib zones. Looks like a little bit more downside on silver. The recent momentum is still kind of bearish, kind of coming down. It's not diverged 100%. If it was diverged 100%, it would look like that. So it's a little flat, I would say, but it's probably some more downside, and then boom. So what that would look like to correspond with gold is could be down here up, or it could slam it down and then up. I think this is going to slam smooth down, because if the dollar does really go wild, this is going to go wild to the downside. That's just how that's going to go. Probabilities though, I'm okay with this. I'm okay with this buy this week probably. Silver, we just looked at that. Oil. I don't trade oil. I just analyze it, to be honest. So if you trade oil, maybe don't even take my opinion, but it's looking bearish. It's coming into a fib zone. It's not there yet, so we're not expecting a bullish reaction just yet, especially with this type of weekly candle that's closing, coming into, you know, trying to get into this fib zone. I would expect it to drop more. On the daily, it looks like it just kind of took off on them boys and dropped. So here's what it would really be a good opportunity on and I barely missed this alert for the sell, most likely. Oil, with it stealing off right here and it being the 78.6. So you got manipulation, impulse, and then you'd get a discount. That's 3 confirmations for me to just be okay, regardless of what happens with selling oil at this level. And then the other confirmation would be the fib zone that I'm looking to buy would also be the fib extension of the trade. So to me, oil's looking like a for sure, not for sure. Oil's looking good to the downside. If it gets there first, that kind of disrupts my plan a little bit. So if it does this, I would kind of probably look for something like this. All right. And that's oil. Let's look at the VIX on the monthly. So if this thing, wow. Okay. So the monthly candle closed like this. And honestly, I just think we're about to see this thing take off. Maybe just to stop right here. But I'm telling y'all what, if the VIX breaks this level, damn, the stock market is going to die. We're not there yet. We're not even close there yet, but I'll mark it off. And on the weekly, this is the type of volume. I mean, the volume is picking up as price is moving up. We get this wick right here. And I think that's where the majority of the volume came in. We're going to be able to see daily volume. If there's more volume on the last 2 days of the week, last week, that means that this wick is why there's a lot of volume. And it's red, bearish volume. No, you don't look at it like that. Volume is just participants. So this is going up. Volume is increasing. I'm going to go to the daily. And yeah, this is going, I told you that the last 2 days had a lot of volume. It's because of that wick. This is most likely going to go up. Now, there's still a gap. It could close it and then go. It's a macro analysis. It might take longer than I expect. If this happens, that means there's one more leg up on the indices. And I don't think that's happening. We'll see soon. But I think this is getting ready to just take off. And this would be the level that it goes to. The next actual level is way up here. It's nuts. I will say this, and it's not going to make sense to most people. The VIX. If the VIX gets up here, all the way up here, and the indices make new lows, that's the bottom. That's the absolute bottom of the market, because the VIX should be all the way at 18 or 80 at the bottom of the market. You see where I'm getting at? So check this out. I want to do them like this, and I never do it like this, but we're going to put the VIX on the top, and we're going to put the S&P at the bottom. And I want to show y'all how this really correlates. We're going to make sure this is on the daily and this is on the daily. Okay. Come on. Here we go. Okay. So obviously you can see how whenever the VIX goes up and hits this 33 level, this kind of comes down and finds a bottom. Okay. When it comes and hits this 33 level, this finds somewhat of a bottom. 33, bottom. All right. Let's go. We got another pair of 33s right here. So let's go look at that. What date is this? February 1st. So let's put February 1st right here. Right. So we're getting bottom, 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 somewhat of bottoms. Okay. Then COVID happened though. It's not then COVID happened. When COVID happened, let's bring this into perspective a little bit. This was on March 18th. Okay. The very top was March 19th. The very bottom was March 20th. It rolled over into the next week. But you see what I'm saying? There's already this humongous divergence in the VIX, as in this is like an extreme move down. And this is what it looks like. If we, and then in 35, 33 is pretty much a bottom. We're not really close to 35 or 33 yet, but we are close to this bottom. So I'm kind of thinking if the VIX gets all the way up here, and the S&P makes new lows, that is the bottom, and we're gonna be able to call it a legit bottom. If this busts through, well then guys, no one in the world is going to be correct. Everyone in the world is going to be wrong. The whole thing is going to die way worse than you've ever seen before. Like probably even worse than COVID. I'm not even fucking lying, because COVID was a black swan. This is fundamentally driven. So it's not even a bad idea. It's not even a bad idea to put chips on this being the bottom. I think there's a reversal pattern for it. Okay, this broke the structure, but the speed at which it's moving, and then the monthly. So now we'll get into the S&Ps. The speed at which it's moving to the downside isn't worth it. And look at this volume. Look at this Fibonacci. Just everything looks perfect. It looks too perfect, honestly, but I'm expecting this to continue down. Ultimately, I want it to come all the way down into this fib zone, which lines up perfectly with the fib extensions. So at this pre-COVID levels is where I want to see the market get back to. And then I want to see it go sideways. I think when the market, because I remember when the market was up here, I was screaming the whole time it was doing this. There's no way the market should be priced at this. It doesn't make sense. The companies, everything, why is it, doesn't make sense. And then we had COVID, and that was crazy to me that I almost timed that without understanding what was going on really. 2-3 years later, we're over here now, and I'm still thinking, why are these companies even priced where they're at? They shouldn't even be priced at that high still. The liquidity in the world is just going to dry up a little bit, and everything's going to come back down into these pre-COVID levels, and then it should balance out and we should go sideways. We should have a big sideways market right here. There's just no reason for expansion. There's no reason for these companies to just thrive anymore. We need to either have a major, massive correctional market, or we need to at least go sideways for there to really be another big move to the upside. I will not buy it if this shit just goes like this. That will be insane to me if it does that. But hey, it could. I mean, I'll put chips in when it gets there, but I would expect it to form some type of a cumulative pattern here. Kind of like it's done in the past, maybe sideways before it goes up. You know, it kind of V-bottoms here a little bit. I don't have a lot of data right here to show, but yep, expecting this to continue down. Let's go to the weekly and look at the speed. That's what we're talking about, the speed and the volume. And if we bring that back, this is really what we were expecting. It didn't quite get into the 78.6, but the speed and the volume is what I'm looking at. And it's just, guys, I don't want to step into a freaking bullet. Like, this is what I'm seeing gonna kind of right here. And it's most likely gonna just fall through. So we're getting this pattern, literally exactly this pattern. Let's take it right here, here, here. Okay, these 3 bars, 1, 2, 3. Even more, we're seeing even more downside than those 3 bars. So what should we expect? We should expect at least this. Maybe a little less than this. All right, so that would bring new lows into the market. I'm thinking ultimately I want it to get all the way down here, but the divergence is going to kick in. If this does continue at this speed, the momentum won't be able to keep up with price, and it'll automatically give in the divergence. And so my bottom on the S&P is 32 basically. And it, look guys, it lines up with the volume. It's not even funny how much it lines up with the volume. And look at those lows right here. These liquidity is a perfect spot. It's right at this area I needed to go to. This is going to be my bottom on the S&P. This is going to be my bottom on the NASDAQ. Let's do the same thing. Okay. Almost the same type of situation with the volume. Lines up really well with the yearly volume of 2020, the year everything popped back after COVID. Okay, and then here's my bottom on these guys, US 30. And really US 30 is not, I don't even think US 30 is the best benchmark to look at, just because it's the top 30 companies. It's not as much of a benchmark as the 500 companies or the tech stocks, right? So the Dow is kind of just my last resort, really, one to look at, and it doesn't even look as good. So I don't care as much, but they all look so bearish. So be careful. If for any reason that you want to buy it, just do it half risk, because I see the opportunity coming up. You know, on these swings, and let's move this back, on these swings right here, I see it. Don't get me wrong. Maybe even from here to here. We'll bring out an impulse fib, and we're coming into those zones. Don't get me wrong, it's probably going to react here, and we might even play it, but long term, it's most likely going to fail this swing around this area and then drop, because the speed, I'm telling y'all, look at that. That's real money coming in here with real volume. So we might get this reaction here, get this little correction up into this zone, but then ultimately bow. I want the market to price in this shit before it even gets into the Fed's time. All right. the bond market. This is the market that we really got to watch as well, because if this market continues to go crazy, everything is going to go out of control. And I've been seeing on the lower time frame some divergence, but this type of monthly candle, come on. Is this a situation where they are trying to send the market up so they can distribute their orders? Or is this genuinely pressure? Just, I'm trying to lean on the side of they're distributing, okay? Because I ultimately want to find a macro bottom, which means this ultimately has to reverse. So I just don't 100% see it just yet. I do see the rising wedge. It's just like in this phase of euphoria still, where every time it really picks up, it just wants to go. I see heavy divergence. So ultimately my spot for this is going to be somewhere up here, way up here. And this is all lining up. If the bonds get up that high and there's still this divergence, I'm going to expect it to correct and ultimately maybe be the top, because this does look a little Wyckoff-ish. We're in phase B now. This could be an up thrust and it could start to move down, and then it could up thrust one more, or it could just not do that and it could just give an up thrust, come down, chill out, and then make a move. That would look, ultimately you would be able to see the Wyckoff insanely after the fact, but I'm kind of seeing it right now in a way of how in the hell is this going to continue to just go up like this? Holy shit. If these do continue this little drop right there, that would be interesting. It'll probably still hold here though. I'm really interested to see how the bond market moves. I don't trade the bonds. I just analyze them. The 10-year is in, the 10 years actually in this area where it could start to fall. And it has maybe created more of a distributive pattern here, with this being the up thrust, the UTAD, and we're coming in here. We could fall very easily on this. The monthly is kind of not suggesting that yet, right? The monthly is saying like, nah, dude, it's about to keep going. But we have reacted here a bunch as well. So I'm not trying to call tops and bottoms on nothing, but I do not look for buys after the market has done super extended moves to the upside. I start to look for sells. So I do actually see these bonds starting to maybe catch a top, which would create a possible bottom for the other riskier assets like Bitcoin. But let's be clear, the dollar is also in control of this as well. And if the dollar moves up, this is going to move up as well. This is going to move down. This is going to move down. Everything else is going to move down pretty much, except the dollar and bonds. Let's look at Biddy, and let's look at it at the monthly, and let's delete everything real quick and get a kind of look at this thing. Monthly close, not good. I don't see any reason to be bullish. Let's see here. Below the 50 EMA on every time frame you can think of, except maybe the 1 hour. No, even below it on the 1 hour. So, I mean, genuinely no reason to be bullish on Bitcoin long-term yet. I think we have another big spill down, and I think it's going to hurt straight up. I think it's going to hurt. My bottom, I've spoke about it. It's around 12K, 14. On the other markets, it's around 12. So let me just make sure I'm correct on this, because this one did make a little bit lower low. So 12.9. So around 13 214, I guess, is really my low on the markets. And if they go lower than that, that's, hey, it's just better pricing. But I'm expecting that to happen. It would form the divergence I'm looking for. It's made so many lows at this point. That would be the best price in the world. And I'm not going to get too deep into Bitcoin. We have a theory on Bitcoin and Ethereum that I'm saving for next wave only, but there is a possibility that these lows hold. You know, this could be the very bottom. It really could. And we could see this make another move up. I already kind of played this move right here, caught it right here. Now I'm expecting another one so I can get in way down there. Really, Ethereum is the one that we've been looking to play. That kind of played out insanely perfect. But Ethereum is the one that we're really looking at to go long this year or whenever it starts to go. You can see how the monthly candle doesn't even look as scary as Bitcoin's did. Weekly has definitely more of a possibility to hold at something like this than Bitcoin. It hasn't even gotten into these levels, and the yearly point of control is sitting right here. So when you go into these lower time frames, in my opinion, there's just a higher probability to look to buy Ethereum longer term than for Bitcoin. Just looks like this strength off the merge probably is what it's coming at. And there's probably going to be a sell the news or sell the rumor, buy the news, whatever it's called type situation where it drops and then pops. If that's it, we're going to be looking for buys on Ethereum in this level on almost no matter what type of situation, because there's volume below it holding it where I would just add positions here like that. And then with this yellow volume being the yearly point of control as well, that would give me a lot of confidence that this should hold. It somewhere in this zone should hold. And then we should see, I mean, even just a move off of this, you can 50% easily back to the 50 EMA. So that'll be a move that we're looking at in comparison to Bitcoin kind of already way past its 78.6. So this bullish move right here, oh, not way past it, I guess it's right at it, but right below it. So we would need to see like a big move up to even think about playing this. Ultimately, we would rather see the move down on Ethereum and then play that. All right, so that's it for the macro analysis. Those are all of the pairs. Really, everything I look at a more broad aspect. I think it's important to look at every market to really get your probabilities down. It's kind of why I don't lose a whole lot. I think it's more not really because I'm not that risky. It's because I understand my probabilities in a whole nother level. So I hope y'all enjoyed that. On YouTube, make sure to like and subscribe. Helps the algorithm. I don't want to get I'm trying to get this algorithm shit going like Andrew Tate or some shit. So y'all help me out. MACD, Tad, you're gonna have to join Next Wave to get the MACD, bro. I'm telling you, it's the secret sauce. I can't just give it out for free. I've gave it out for free though. So if you want to go look through every single YouTube video that I've made, you'll find it somewhere in one of those. All right, y'all. I appreciate it. Y'all have a good one. Peace.